Alright guys, welcome back to the channel, and today we're going to learn about Ethereum. But the first things first is the verse of the day. In Philippians 4:19, and my God will meet all of your needs according to the riches of his glory in Christ Jesus. Remember guys, don't worry about tomorrow because you got enough worries about today. We aren't promised tomorrow, so live today as if it was your last. Very, very encouraging words, but keep that in mind, guys. All right, so into Ethereum. So what is Ethereum? Ethereum is named a couple things, but a lot of people are just mainly calling it the decentralized internet or the computer of the future. So basically how it works is it's our digital future. So what it offers is smart contracts. So instead of having to go through one guy or go through attorneys, make sure this goes through, instead everything's done through a smart contract, so it's done. So, and blah, 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 or you can just watch a video. So here's the video, guys, so you can watch what a smart contract is.
What are smart contracts? A smart contract is an application that runs on a blockchain network. Developers write these contracts, then deploy them to a public blockchain network where people can interact with them. Today, the leading smart contracts platform is Ethereum, but there are many others. Smart contracts are much like legal contracts, except instead of legal language defining the terms, code dictates the contract's terms. Unlike traditional contracts, which require a court to mediate disputes, smart contracts are self-executing, with the blockchain's immutability acting as a judge's ruling. Since smart contracts run on the blockchain, they are unstoppable with an auditable history, making them ideal for financial applications. Smart contracts are also flexible and can be used to build things like decentralized exchanges, tokenized assets, games, and much more. Many companies today have begun to take notice of smart contracts and their potential to build the economy of the future.
So what Ethereum provides is, here's a couple things. So they provide banking for everyone, a more private internet. So look, you don't even have to provide all your personal details to use the Ethereum app. Like we showed you the MetaMask app, that's also more decentralization. It's a peer-to-peer network, so instead of dealing with the third parties, you can automatically have your contract with another party. So it's great. Usually when you get rid of more parties, it's more money in both of your guys' pockets. It's censorship resistant, so it's decentralized. So a lot of people were talking about like Facebook and Google were blocking ads or like political ads throughout the whole campaign this time. So look, this gets rid of it. There's no Facebook or Google saying, yeah, you can post this ad, or no, you can't post that ad. Or for example, when you go to your bank and you try to make a payment and your bank is like, nah, bro, you can't pay for stuff there. Instead, now it's like, oh, well, I can pay for it because it's my money. I can do what I want. Instead, the bank doesn't really allow you to authorize your funds through anything. I mean, just ask them. Try to go. For some banks, you try to buy cryptocurrency with them or with your debit card or credit card, they won't let you. Trust me, I've tried it several times. It's very hard, and they don't let you do what you want with your money. So it's not really your money. So it's the same thing with houses. If you own your own house, don't pay your taxes 1 year. Watch what happens. Do you really own your house? No, I don't think so. Alright, so what's Ethereum in a nutshell? Yeah, I can read you all this boring stuff that's right here, or let's just play a video.
You've probably heard of Bitcoin, but what about Ether? There's an arms race going on right now in the world of cryptocurrencies, and Bitcoin and Ether are leading the pack. Ether's a 3-year-old digital currency, Bitcoin's closest competitor, and it's largely been flying under the radar, despite growing at breakneck speed. Investors have been super bullish on Bitcoin because it's nearly tripled in value so far this year, but Ether, it's up roughly 4,000% year to date. These rivals have a lot in common. They're both open-source digital currencies used to make somewhat anonymous transactions. Ether even has digital coins just like Bitcoin. They both also saw their share of big volatile moves, the most recent when Ether virtually lost all its value in a single day in a June flash crash. It went from $319 to 10 cents on one exchange before recovering all of its losses. But here's the critical difference. While they're both powered by a type of technology called blockchain, a whole lot of people think Ether's technology is way better. So what's blockchain? Think of it like the DNA of a digital currency. It's an online ledger that records every single transaction made. Since cryptocurrency has no physical imprint, blockchain allows money to be tracked all over the web so it can't be copied or counterfeited. Ether's blockchain is called Ethereum, and unlike Bitcoin's blockchain, it features a key piece of technology called the smart contract. It doesn't just track transactions, it programs them. We have a touch of this now with automated payments and deposits, but imagine being able to have your money invest, spend, and save all on its own. You'd literally be putting your money to work for you. Smart contracts let you exchange not just money, but property, stock, really anything, without having to go through a lawyer, notary, or some other service provider. It cuts out the middleman entirely. That's why investors have taken notice, and why many think Ethereum is a stronger and potentially more lucrative technology than the one that underpins Bitcoin. It's like the ultimate vending machine. You make a deposit of the cryptocurrency for the specific product you want, and all the mechanics of that transaction are automated, right down to the penalty if you don't hold up your end of the bargain. So whereas Bitcoin is all about payment technology, the Ethereum blockchain technology has other real-world applications, ranging from gambling to banking. That's why a big driver of the Ether rally is its popularity among big corporates. Just take Barclays. It's using Ethereum smart contracts as a way to trade derivatives. Either way, for all the attention that Bitcoin has been getting, it's clear it's no longer alone in the cryptocurrency conversation.
You guys are like, what's so special about Ethereum? Why is it so special? What about any of the other cryptocurrencies? All right. Here's the list of all the cryptocurrencies that are currently on the Ethereum network. 39 pages of 100 tokens. That's 3,900 tokens on the Ethereum network. If that's not enough, I don't know what is. Ethereum is the second biggest. So now let's see how many is. Well, there are a couple on Bitcoin's platform. Well, not platform, but that also use Bitcoin like as a payment. And I'll do a video on it as well so you guys can understand it. Let's see, where is it? It's not on this list. The token is called Stacks or STX. Let me see if it's on here. Blockstack, there it is. Blockstack, they pay you in Satoshis or Bitcoin. I'll do a video on it so you can understand it. There's too much information on that one for me to describe in this video, so we'll just let you know, look, they got a lot of tokens on here. That's the main thing you need to know. So here's the Ethereum white paper. I definitely recommend taking a look at it. We recommend, let me see. No, this isn't the, yeah, this is actually the white paper. So normally they have like an open PDF, but you can just look into this, read it yourself. Very informative. Next generation smart contract and decentralized application platform. Really cool. So Ethereum blockchain. So you can check out some of the recent things that happened on Ethereum or recent payments. So like you can see like a minute ago, this guy on the Spark Pool miner. These are the latest blocks. So they're at proof of stake right now. So before they were at proof of work, which is Bitcoin's mining algorithm. So basically what proof of work does is they hash a bunch of functions and they're able to mine the next block, or whoever solves it is able to mine the next block and they get their miner fees. Instead, proof of stake, you have a group of stakers like these, Mining Pool Hub, F2 Pool, Spark Pool. They stake tokens in a pool or in a smart contract, so they don't really hold the tokens. That's why smart contracts are so huge. They hold it in a pool of tokens, and it basically provides, I guess you can say, strength to the network because they're holding up their tokens, and it holds up the price. It holds up the price of the token. So like instead of everyone just selling all their Ethereum or all their Bitcoin, the smart contract or the staking allows the price to stay stable. So here's some of the contracts or the transactions that were in some of the blocks. So it'll say like this guy's wallet. You can go into his wallet, see what it was. There's a transaction fee of 36 cents and a gas price of 29 gwei. and he sent out 0.15 ether, so 89 bucks. I don't know what he paid for, but you can figure out what it was by going to this 2 wallet and see what they normally get there, and you can figure out what it is. But that's the cool thing about blockchain is it's open source, so nothing's hidden, so everyone can see everything. So now you're asking, why in the world would I not invest in Ethereum? Why would I wait, or why would I be leery of it? This isn't financial advice, guys. This is just a video telling you about the Ethereum blockchain and the history it had. So back in, when was this? 2017, it looks like. So this was when Ethereum was just screaming and soaring. Someone put out a fake tweet that Vitalik Buterin died. He didn't die. But anyways, they put out a fake tweet, so it caused the price to just tank. So it went from 317 bucks all the way down to 216 within just like a matter of a day or 2 days. And when this happened, it basically said, like, look, it's still volatile. It's not foolproof. It's not able to be up against anything. People thought, oh, Buterin died, so it's over. No, it's not the case. The project is decentralized. Vitalik Buterin, he did help build the platform, but he is not the platform. So if he dies, it still goes on. There's also another flash crash that happened. It was just I guess a trading issue resulting in a flash crash. It was on the Coinbase. So Ethereum dropped from 317 to as low as 10 cents. So, I mean, I'm sure you can see the scare in that. So this is anything you take an investment in, you are taking on some sort of risk, whether you're investing in Walmart or whether you're investing in the next IPO or a major spec stock. You still are going to have risks in everything you invest in. So here's another thing. This is called the DAO hack. You can research this as well to get some more information on it. But basically what happened was a guy figured out how to, he hacked on Ethereum. He hacked the Ethereum smart contract, and he figured out how to get into the smart contract and get it to pay him out DAI tokens, which are stable to the US dollar, in exchange for a maker, but without having to exchange it in there. So he's basically stealing from the platform or from the contract. Basically what it caused the price of Ether to do is go from 20 bucks to 13 bucks. So almost a 40% drop. So, I mean, you guys got to be careful with things like this. It's out there. Yeah, maybe smart contracts are great, gets rid of the middleman, but there's still problems with it. So they're still resolving those. So these are the risks you got to take in with this project. You can read more about it. I'll put a link in the description. But basically what happened was the attacker managed to drain more than 3.6 million Ether into a child DAO that has the same structure as a DAO. So DAO is basically the decentralized autonomous organization. So they were left with two options to either create a soft fork or a hard fork. They ended up doing a hard fork for fixing this. That's why you have Ethereum Classic and Ethereum 2.0, or not Ethereum 2.0, but just the regular Ethereum. And it went to the regular Ethereum. Still, Ethereum Classic is out there, but they had a fork. So, I mean, code isn't law. There are some problems in the code. So you guys have to be careful with things like that. I mean, just think the smart contracts, they haven't figured out this situation. So say you have a tenant in a house. They have a smart contract that has to pay you rent on the first of the month every month. And if they don't pay, the eviction process starts. Now say that tenant, they get sick in the hospital for a week. But they still have the funds. They just couldn't pay it because they had to pay hospital bills. It's going to start their eviction on them automatically. And they were great tenants. You had them for 4 years, but the smart contract had a glitch in it because it didn't solve for, oh, well, what if she got in the hospital or what if she got sick? So that's the problem that occurs with some of the smart contracts, so you do have to keep that in mind. These are not foolproof. So this is what happened with the DAO hack. So Tether, which is the stablecoin, which is pegged to the US dollar, it went as low as 91 cents. It's never supposed to do that. It's supposed to stay around $1. And when it went down to 91 cents, those guys were like, let's buy them up and make some profit. They sold it all off and rode it all the way up to, what is that? Well, let's just see where it's at. About $108. That's a nice profit on a stable coin, guys. That's huge. It's like 10%. Stable coins normally stay at $1. So now you guys kind of see what some of the issues are with it. I recommend taking a look at the Ethereum white paper, what it does. I do like the Ethereum blockchain. It's definitely the future of our internet. You can also, let's see, where is it? So this talks about Ether. So here's Ethereum 2.0. So Ethereum went from proof of work to proof of stake. I already stated that before. So now we are proof of stake. It allows it to be more scalable. So now they can do thousands of transactions instead. Before it was only like 30 transactions, and you were still getting ridiculously high fees, like maybe $15 at sometimes, $20, but more sustainable. So it's not destroying the environment by draining so much energy. It's more secure. So now instead you're working on sharding, which instead of just having a 51% attack that's possible, now it's just there's different shards or different blocks working on it. So here's what sharding is. Sharding refers to splitting the entire Ethereum network into multiple portions called shards. Each shard would contain its own independent stake, meaning a unique set of account balances and smart contracts. So you guys can read about this, but basically it splits the blockchain up so it can solve. So I relate it to like this. You have one cashier at a store, or you have 10 cashiers, and which one is faster? It's no brainer. 10 cashiers is obviously faster, still doing the same thing, processing transactions for the store. So the big problem, too expensive to run. It's more susceptible to centralization, at the same time requiring each transaction to be processed by every node will make it so that Ethereum never scales. This is why sharding is a potential solution to this problem. So there are challenges to sharding. This talks about it. So sharding sounds great, but there's a number of potential attack vectors, such as a single shard takeover attack. Basically, an attacker takes over the majority of the block producers in a shard to make a malicious shard. Basically is fake transactions. So, say Bobby pays Dan, instead it says Dan pays Bobby, and now Bobby's going to say he's the malicious actor. It's basically going to pay him Ethereum. So you guys can read on this and see what it is, but this is just a brief overview of Ethereum. It's basically the future of the internet, in my opinion, and how the smart contracts are going to go. So that's mainly a brief overview of Ethereum. I know you may be a little more confused at this point, but big question is, how does email work? Okay, you just know it works. That's all you need to know. So this is, if you want to learn more about Ethereum, you can dig more into it. I can do some additional videos on it if you guys need me to. But the main thing is, guys, this is the future of the internet. Ethereum is the blockchain. They got lending, banking, everything's on it. You can also do contracts for houses, for real estate. I mean, anywhere you have a contract for anything, there it is. Welcome to Ethereum. So if you guys like this video, if I missed on anything, leave it in the comments. I'll go ahead and address your comments, or I'll make updates to the video if you guys need me to add anything else. I know it was a little brief and it had a lot of content in it, but either way, if you guys like this video, hit that like button. If you guys don't like it, hit that dislike button. If you guys are new to the channel, go ahead and subscribe to that channel, or this channel. Would really appreciate it. And thanks for watching, guys.